FXBros.
Whoa. What up, everybody? We are live. We are live, and we're about to break it down. First of all, definitely gonna make some changes to the charts. We got a lot of levels that's been broken and basically null and void now. A lot of areas that we can remove to target because the market is already targeted and wiped out price or repriced the price to a fair value. And then we should be looking for our next level. I know for sure on this daily level, but we still continue bearish. We have a gap down at what's that, from April like 2020 right here. We could look into. But yeah, we're gonna update these charts right quick. Give me 1 second. I'll be right back. Alright. Back. Well, Scotty.
Can you hear me?
I can hear you. Can you hear me?
Oh, okay, cool. How you doing, bro?
I'm doing good. I'm live in the studio at a nice session after this. Everything going with you?
Pretty good. Just been chilling. Nothing.
Well, like I said, I wanted to update the chart. A lot of these areas are pointed out. That was easily taken away.
Yeah, keep running it, bro. I'll be right. I'll warm up my tea.
Yeah. I could have easily taken this area off last week after we broke through on Wednesday, the 27th of September. And Thursday, we broke back above it. Then additionally, again, that Monday, we broke back and closed through it with force. It's like we started above it and closed all the way through it. That was, I think, the only candle that did that, so that was powerful. And the fact that it did it on a Monday, and then we showed rejection on Friday, going into this Sunday. Damn, did we get a sell off on Sunday? Oh yeah, it was Friday evening. That's what that was. Okay, that starts Sunday. All right. Just making sure. Should look a little great. This low 63.46, 63.40. Okay. Yeah. All right, but yeah. So we had rejections from this area. Like I said, I didn't have to leave it on, but one is still showing rejection over this 50% level of this gap. It's not really, I can't see it's really accurate price data that is respecting this. But I mean, if we, even regardless of this gap, if we just look at market structure, we got rejections here. And we get a breakthrough with price rejection to the upside, still keeping pricing under here for these days. Then we get a strong price breakout. Nothing gradually growing. It's just a strong price breakout out of here on this new week starting off. So that's the telltale sign. Also respecting this as discount. You see prices dipping right below under here. The way you can add buys, you can add buys. Um, Probably wasn't much here, but with the rejection of here and then maybe the push higher from this next day, that would be an area to potentially add buys. But like I said, it was one thing, another level that it didn't break through to continue bullishness was this old yearly low that we still are respecting. And I'm actually going to take this off and we'll probably move this to here. This is the new old yearly low. Yeah, like that. I'm going to leave that for now. Take this off. But nonetheless, that area was being rejected here. We have rejection from this old yearly low with these wicks. Price did not close above it. I don't care how high it went. We still didn't close above it. So that was all the signs you need to know. And talking in hindsight, we just got to remember that once we see these things set up, just take that trade. Because, I mean, after you've been talking about it for so long and you've been seeing the market continuously print and create the same moves in the market, you have to take that trade blindly. I know it's difficult, when you live in the markets and the market's moving all kind of crazy and shit. It's hard to just pull a trigger on something that doesn't look like what it looked like. Because trust me, this price that shot up. I mean, it's a wick now, but when price was bullish, yeah, it looked good, but from this type of structure, like I would think this candle when it was green would have had more chance to close above these wicks if this candle closed above this wick, like a strong body, then we get a continuation of that volume strong. But the fact that we begin all these rejection wicks all around here, you know, that just alone speaks volumes that this area was just gonna be a difficult area to break through, and we was gonna need to see, which we haven't seen pretty much since this September 11th on Monday, this candle wick high, we haven't seen price strongly break above this. Yes, we got to close right here, but that didn't pan out so much. All it did was create a whole lot of volatility to the upside to entice people into buys. Because they were focusing on this area right here, trying to see if we go swing those highs. But hey, I don't care how we looked at it. We did not close bullish, nor did we close above any of these rejection wicks, let alone this initial rejection wick right here. Like I said, we did have a minor close above, but it's still weak because the rejection wick that it had from up here. If this candle would have closed above here, let alone taking out this high, this high, this high, and closed above here, then I would have kind of had a little bit more um, confirmation as far as the next candle would have continued bullish to close above these highs, equal highs. We got 1, 2, 3 equal highs right here. So that's a strong rejection area, followed by these rejection wicks down here. So that's an area that people were expecting the market to break through and possibly close above, judging off this candle. And then you get this candle here after we get this extreme drop. And not only is it extreme drop, but it was a new low of the year after we had this old yearly low from September 6th. We get a new one here, September 27th, which that has also been broken. But being that we did create a new low, that was a lot of power, that was a lot of force, that was a lot of grabbing of liquidity and stops. So the only thing that's right for it to do is to attack and go for the opposite side of liquidity, which would be ultimately this high, but overall this high. That's the struggling part where markets struggle to get above. So I would have targeted that high for sure. And even waiting for this engulfing daily, you still had a high of, let me see, this was that 64, 64.30. 64.50, so that was still like a little 20-pip move. Not crazy. Granted, you could have held out for more as market continued bullish. And the reason why this candle had so much force was because one, we had a strong rejection candle that ended up being engulfing after market swept this new important low, which was the recent, yearly low that in turn turned into this being a, previous yearly low. So when you take out a very strong and confirmed, validated point of rejection, and you close below that, unless if everybody is in accordance, and when I mean everybody, I mean all countries, as far as currencies are in accordance of that the market is failing or should be going bearish, whether the two pairs that you trade or the two currencies that you trade in the pair, then the market will continue going bearish. But when we take out these areas of liquidity, that's pretty much what the algorithm is designed to do. Because like I said, even though I do feel that they do, run a lot of computer algorithms off of this, one thing that I look at is the market will not take out a very strong, confirmed daily range and then continue in that direction for the next 3 or 4 candles. Like it may continue one additional candle after we broke an important low, but the reason what I'm getting to is the fact that the market makers and all these banks, they don't want to create a market of too much, highly probable or just something that's very, very easy to indicate. It's very easy to find a trending market. That's the easiest thing to find. Even though you still gotta wait for a trending market to develop, you can't just look at on a daily, look at like 2 or 3 candles and say, oh, we're trending. You gotta let a week or two play out to see if we, get a pullback and a continuation to confirm that trend. But nonetheless, the market ultimately was only just grabbing enough liquidity, tricking enough traders into sales to in turn take all their money that they put on that sale to reverse the market back up and attack the other side of liquidity, which was all these wicks rejections. I say ultimately we could attack this high, but I mean, as you can see, we really didn't need to continue lower. We just needed to go high enough to entice enough people into buys. The same people that bought this market were the same people that got happy about this bullish push high. So especially, and then you would be even more enticed to this buy, especially knowing that market swept liquidity, because everybody's being traded and taught about liquidity sweeps and all this shit. This is a new wave. So when you get taught these new things, these new terminologies and strategies, it's good, but that shit don't matter unless if normal structure and how to read price for real. Like damn, all these different terms and ways to look at the market. If you don't understand just the bare bones on how to look at structure and what price is doing and what price did and what price tried to do but failed to do, like all them type of storytelling measures, then it's not gonna work for you. None of these new things, strategies won't work for you. You have to understand what they were trying to do, why they failed to do what they tried to do, and what was the overall move. And as you can see, looking in hindsight, after we swept this area, there was enough liquidity to be grabbed to in turn push market higher, only because they wanted to push market higher. One, to take profit, but also the flip side of that was to entice people into buys. Why? Because they know the overall move to sell. So if we added a large position here, and we know we need to add overall, we need to add like $1 million or 1 million units or however you want to look at it, just 1 million in number. Banks and countries of that matter, they can't open one trade of 1 million units. And I'm just using this number as an example, but so what they do is they break it up in chunks. So let's say this was like maybe 300 grand. Then we sold off, took a little profit, enough to, satisfy us and get us into buys, only to push us back up here to add another large position. So we were up 300 over here. Now over here, they probably added another 500K. And then probably look to add somewhere there when you see more, manipulation on. And overall, you just gotta trust with the move. Like I said, we already confirmed sweeps below old lows, then the enticing in the overall trick and direction to entice you to buy. Because trust me, I'm gonna look at it like this. If we was gonna buy and the market was going, that's all the rejection we was gonna get from this daily gap. Like this was gonna be so powerful of a daily area that we was gonna reject this and shoot the fuck up to the moon. Probably taking out all these levels, eventually. Maybe get a nice little retest like this had, then especially from that point, shoot up and go bullish. That was simple as that. We would have been going, especially with all these rejection with these would have been closed bullish candles, and we would have continued high if that's where the market wanted to go. So after looking back, we know that obviously we still going bearish. So it's more price targets for bearishness. Um, and then that's just kind of playing more into the narrative of what is the lowest point we recently experienced, and that was around the pandemic time. So are we retesting that area just to show any truth to that value? Is that where the market is really supposed to be after all the pandemic and all the band-aids we put on the market to fix price, to manipulate people into thinking we good? Is that really where the market's supposed to be, down there? If that's the case, it's starting to show in everything. I just watched a video on the housing market, as far as for investing in commercial properties. And, there's 10 cities out of the country that's experiencing crazy, crazy, crazy home price decreases from sellers. So that's going to, hurt home values and everything, but also it's going to help people get into homes. So that's going to help home sales. So we'll see that in the news, hopefully January, February, if we still continue with this decline in those certain cities. We'll start to see that happening, because that's the true value of a house. People can afford that. I mean, interest rates is high for houses. I think about to approach 8%. So yeah, it's just a big correction overall. That's basically what we had. We had a big correction, and it's happening in all markets. And if you don't look at the overall, the macro scale of things, then yeah, you're gonna be get faked out all the time. You're gonna look at this as like, oh, we in bias, which yeah, anybody would think that. But you gotta look at, okay, this, if we do go up there, we better close up here. The reason why I say we better close, because we have ample opportunity to go bullish. So I don't want to see no, oh, we were just trying to go bullish. Like, bro, you had all these weeks to go bullish. What you waiting on? That type shit. Like, what you waiting to go bullish on? Like, we already done dropped crazy. You know, we still in this continuation of this bearish pattern from July, man. You know, we way in October now. It's from July. So we well overdue for some bullishness. Like real talk. But we was well overdue for bullishness, you know, here. 2022 was like, damn, we need some bullish move. We've been dropping. Did we get it? Of course we got it. Came through a little later. Will this happen right here? We don't know. We gotta wait and see. But look at the signs back in here. When we were looking at a lot of bearishness from August 2022, and we're like, oh man, you know, we need some. We've been dropping too long. We need some bullish. Look what the market did. We created one low. Market tried to test that low, but it didn't attack it enough to sweep any of the low. So that was the true low. And it was even more confirmed after this engulfing, followed by a continuation of the bulls. This engulfing didn't lead to this type of engulfing scenario. We get this bullish engulfing here that led to a fake out, if you will, and a continuation for bear. Why you want to wait for confirmation is because after this engulfing happened, one, we didn't shoot all the way up to trick people into buys. Did we know? If anything, we was tricking people into sales. You see the rejection down, tricking people into sales. Market came back up. A nice little, I call this indecision because market went high and market went lower, a nice little body. So we undecided. So, okay, I don't know what we're going to do. But, well, we undecided there. We undecided at an old high. So if anything, even though we broke this, I could give the market a little rejection. You know, it ain't going to go up in one direction. So that would be the area where I would get it because we tried to reject here, but the market was still strong. That's a good sign for bulls that we closed bullish. Had a nice rejection wick, but we still closed bullish. Again, indecision, but we closed bullish. So after all that struggle, okay, I give you that. I give you the little sell. You can have your little sell. You heard me? Entice people into sales. Furthermore, also the wick taking out this first initial enticing selling wick, taking out their lows, furthermore enticing people into sales like, oh, we broke this low, we going down. And what do you do after you grab all those indecisive retail traders? Enough volume and enough volatility to shoot all the way through the roof. And that's what started that trend. But we had to have confirmation. We had to have manipulation to the downside to get people, enough people into sales to trick their ass and continue bullish and further fill, you know, that gap. And from that point, which was a struggle to break above, the market met February 2023, which is the highest the market has ever been this year. And as you can see, we have failed to break that area and thus far created another bearish market. And that's what we are right now. And with the signs showing, especially after I broke all that down, I really don't see the bulls coming in because they had ample enough time to take us into a bullish market, and it was all cap. That shit was all cap. It was just enough to trick us. Like a lot of people who saw that move back in 2022 would have looked at this like, oh, I know exactly what's about to happen. We got rejections down here. Oh yeah, we about to buy it. But these rejection wicks up here, and especially this one not going above this high, is like damn near all I need to see on a daily. Like, hold up, bro. Last time we was kind of tricking niggas to go for sales and the market will still continue bullish. But I'm not seeing that. I'm seeing rejection wicks and I'm seeing new lows getting created. New yearly lows getting created. New yearly lows getting created. So I'm gonna just, you know, trade what you see, don't trade what you think. And simple as that, man. I don't know
Yeah, that was perfect. And I mean, you pretty much nailed it right at the end. Just
I love this
trade what you see. Trade what you see what you. So that was beautiful. Yeah, sales are looking good. I agree with everything. But yeah, man, you it was a nice little monologue, if you will.
appreciate that, man. And like I said, sometimes it takes a few months of trading, you know, and talking about trading, you know, every week, so where you can really step back and look at the larger scale of things. Like looking at this struggle for bulls trying to go higher, I would have never even probably looked at when was another time we were struggling to get somewhere. But but what did it look like for that struggle to turn into a positive situation? And that's when I easily saw like, okay, we had a bearish market here. So why did this market go higher and not struggle to go lower? And once you break down and really see what's going on, I ain't really point out this is a crazy ass sandwich engulfing, like, like it's yeah, it's beautiful. And then you start to see the same things, like you see this bullish engulfing off of rejection, off of these lows, but you see a continuation, and that was the same thing I see here. But we don't see the continuation. So trade what you see, not what you think, man. At the end of the day. I'm gonna run the news right quick. Hold on one second. Here. Oh, we back.
I'm back. My bad. Columbus is tomorrow too.
Oh yeah.
Bank holiday. Yeah.
Well, we have no news for USD, as Jay just pointed out. We got Columbus Day on the 9th. That doesn't mean shit for Australian dollar. Australian dollar said we still running it. Westpac consumer confidence change. And we got the NAB business confidence coming out at 7:30 and 8:30 Monday. Tuesday, no news. Wednesday, October 11th, we got US PPI and FOMC minutes. Not our trading time, but should probably see a little slight volatility, around that time of day on Wednesday. Thursday, you already know, jobless claim continuing and initial. We have core inflation rate month over month. So we'll just see how the inflation rate was changing month over month. Inflation rate month over month. We have a core inflation rate year over year. Inflation rate year over year. CPI. Oh my God. CPI. And then, yeah, boy. Thursday gonna be crazy because we got the Chinese yuan.
Damn, all of that is Thursday morning?
Yes, Thursday they have their inflation rate Thursday evening. Thursday gonna be a mover. Even though the Chinese and the Japanese markets don't really affect us, but they kind of do because Pip had brought this out that Australia does a lot of business with Asian countries.
Shit, we all do. U.S. is their biggest customer.
Yeah, U.S. is too. So I mean, with that being said, that probably will add maybe we go monitor it and we go see how much that's gonna add. But
For sure. Yeah,
still
for sure.
it's still a big deal. That's a big market mover.
Yeah.
That country, that country.
Oh, yeah.
So
they are definitely on the rise, you will.
yes, definitely on the rise for dominance, if not already here. Friday, Friday the 13th. Oh man. U.S. Michigan consumer sentiment. Ain't Friday the 13th? Ain't that the movie series?
Say that again.
Friday the 13th. Ain't this like Jason or Freddy Krueger or some shit?
Yeah, boys, Jason.
Oh shit. All right. So Jason will be visiting us in the markets on Friday the 13th in the form of Michigan consumer sentiment. So y'all just be watching out for 10 o'clock. He will be here Friday the 13th. And shout out to me. My birthday will be on Saturday. You heard me?
Let's baby.
You heard me? That boy gonna be I'll be on this earth for 20 years. Twice. You feel me? But yeah, the market is following NFP. I'm starting to see we have a 1-2 jab at the beginning of the month. So we get NFP that first Friday, and then that following week we get CPI and inflation rates coming out. So yeah. Looking like for swing traders, I'm seeing that those first 2 weeks are like damn near ideal for you to like see what the mitigation, what the manipulation is, and where to enter in for the rest of the month. Especially with all these high volume news indicators, like the first 2 weeks are the most crucial for every month. Seem like. So with that being said, we're gonna keep in the back of our head knowing that on the charts, we just recently created a new low of the year. I think that was last week, and that was the beginning of the week. The beginning of the month. So if that's true, and this week creates another low, a new low, then I'm gonna go to say that the first 2 weeks of price structure is pretty much the telltale sign of where we're heading for that month. And we may be and then it'll look better on the weekly and the monthly time frame, so we can go to that right quick and see. But yeah, I think so. Yeah, got a lot of wicks to fill, especially if we get a lot of volume to kick in. This is gonna be a high volume week, just like last week was high volume week. So I'm expecting at least maybe the market to fill this week that last week did. We continue on the bearishness. I look at it like this: the market started all the way up here from February 2023. And ever since we created this engulfing situation, the market never gained enough strength after it took out substantial lows, confirmed support. We didn't have enough strength to take out these highs. So that was the high of the year. And it was a strong high because it was met by this first little structure continuation right here. That was that. Well, the last one. This is the last uh, swing area that created the low of last year. So we're looking at the weekly. So for that not to be broken, this last point, I could see that should have been easy. We should have broke above here, maybe above here, but maybe not here. But the fact that this first step, this last swing, lower position, did not get broken above, and then we've been trading below ever since. Like I said, this was the high of the year so far, or this year. This market was trying to attack that, and it failed to break above it. So after we swept that area, we did sweep it a little bit, went higher, tricked enough people into buys. Nice engulfing, sold off. People probably was waiting for us to break this levels for us to really get into sales. Like I'm gonna wait because I don't know if this area is just gonna take it out, and then we gonna continue on our bearishness. Because that's structure. Market don't just keep going straight up. So with that being said, we kind of hovered around, consolidated, fucked a lot of people up. People lost a lot of money because they were still waiting for the market to continue lower. We did get a nice little push down, but no continuation. And that push down was enough to take out all these rejection wicks, these highs, to put us into a mind frame of, okay, maybe we might be continuing this bullish trajectory that we started from October 2022. That didn't pan out to much. Just basically, we got enough to take out these highs, but not enough to take out this high that was trying to take out this structure. That failed. This never got high enough to come here. So thus, we created a nice bearish engulfing, a sign to let you know we exhausted to go any higher, and we about to sell our nuts on y'all niggas. And that's what they did. That move alone was not prominent enough to continue bearish, so we had to do a little bit more tricking to be like, yeah, maybe we probably still going high. We were just playing. We was going high right here, but we were just playing with that engulfing. I thought we was going low, but now we're going to go back high. We're going to give you another engulfing. But what it didn't do, it didn't take out this high. If it would have took out this high, then more people would have been more enticed to buy or to hold on to those buys. But with the fact that we didn't take out this high and market kept going lower, it was more of a, confirmation that your stops was going to get taken out. That's all you needed to see. No green candles on the weekly. Like, come on, bro. What more you asking for? Now, granted, it took us a nice little, 4 or 5 weeks for us to finally break that important level and, for it to be a true bearish market. But, that's how the Australian dollar moves. It doesn't have a lot of volume where these weeks are going to just be pushing prices, faster than the Australian dollar typically pushes it. There are other pairs for that. So with that being said, it's more of a defined, consistent, predictable type of pattern. So it's scary to think that like it could be this easy, but yeah, when you start to see a continuation, especially 3 candles like this, but maybe the candles took out this, but ultimately we were testing this low of the year, if you will, the new low of the year. And ultimately we got there. Market wasn't going any higher. We didn't print any more green candles to think that we were going to go higher like this one did. That was an engulfing. This was important because why was it important? This candle took out this important low, which was, a structured low from this. That's the reason why this bullish candle was important, because we came right after, important, strong support that was created in the market. We took that out. So if the market is not going to continue bearish after it takes out a strong level like that, then there's a 90 to 100% chance the market is going to reverse, turn around, and go to the opposite side of liquidity, which it did. After it took that out, it's going to go for the opposite side of liquidity, which it did. Took us a little time, but we got there. And that's basically how you read the market. I mean, granted, yeah, we want to be in buys. You know, we near this area. This is a nice little area for buys. You know, market was buying up around here, rejection week. So yeah, it's a nice little area to catch buys, but trade what you see, not what you think. Until we get a nice engulfing on the weekly and we attacked and took out enough liquidity and enticed enough traders to get into sales, it won't be any buys. There's no reason to buy. Like they don't buy just to buy. They buy when they can get your ass in enough sales. That's when they buy. Because if they ain't enough sales to trick you in a sale, then they have to put enough, they have to get out of that sale, take profit, if you will. And when you take profit on a sale, you internally putting in a buy order in the market. So that buy order is what fakes people out and in turn turns the market back bullish. Why? Because these banks and institutional traders have enough money and influence to make the market move that way. Retail traders, we know, only way we could make the market move, we will all have to come together for like some retail trading seminar. So where we all come together on a Zoom call, talking about like 50 million traders, and we all go agree at 8 o'clock Tuesday morning, everybody buy. But that'll never happen. That's the same thing as going to a football game and telling everybody in the stands at 8 p.m. we're gonna need y'all to be a little quiet. We could just want to have a moment of silence. Now, granted, maybe a moment of silence, they might do that, maybe. But if you try to tell collective people, everybody just be quiet, we just want to see how silent we could get. It's gonna be a few assholes. They gonna wait for that silence to come and they gonna scream just so they could be the dumbass to fucking scream when everybody say be silent. So
Yeah, then you got babies.
yeah, you got babies. Yeah, like it's impossible.
Well, you're right. You're right.
Yeah, it's impossible to get everybody on the same page. So the market makers know that, the banks know that, all institutions, they all know that shit. They know we move off of ego, we move off of impulse, we move off of greed. So hey, that's easy. When you think about it, when you got billions and trillions of dollars, nigga, it's easy to keep the bag. All you gotta do is just put that, back in the day we used to have cartoons, used to be about somebody sitting on a donkey or a horse and they'll tie a sausage in front of them. So the donkey or the horse still think, they want to strive to get that sausage. But to get to that hole, they gotta walk to it. But every step they take, the damn sausage or the damn hot dog keep moving away. So
Yes.
they move further. They move
the same distance.
Yeah, it's like, damn, I see it right there, but I can't get to it. It's like,
Right. That's a nice subject.
no, facts. So they like that's an easy way to make money. Like shit. Oh, you want this $100? You want this Ferrari? You want this brand new house? You want this nice luxury life of living off the beach? All right, bet. Come by right here. Look at the market. It's going up very fast. Come by right here. I got you, fam. Hey. And what they'll do is 9 times out of 10, when you do buy, when you do buy when they want you to, the market will go in your favor because that's what they want you to do. Nobody wants you to eat a McDonald's burger and be like, damn, this shit nasty. Because you ain't gonna come back. If we make the burgers nasty and and not tasty, you ain't gonna come back. So we got to give you some juice. But you know what's gonna happen? Your ass too greedy. You trying to make your mortgage payment in that trade. You trying to pay your car note in that trade. You trying to quit your job in that trade. Nah, nigga, the market just gave you free money. Now, granted, that free money may only be $5, $1, $10, $50. You can't get mad at that. You only got $500, $1,000, $5,000, $10,000 in your account. You can't get mad at that. You got to take that free money. That's like walking down the street. Because if you walk down the street, you see a $10 bill on the ground. I don't care who you are. Well, maybe certain people. But typically, Most people probably go look at that bitch about 3 or 4 times if they got a good conscience before they decide to go pick that bitch up. Now, if it's $100 bill, yeah, you already plotting. You gonna be like, who looking? Let me go walk over here, step on that bitch, tie my shoes, you heard me, grab that bitch and be on my way. But yeah, man, that's free money on the ground. You go take that. So when you see those trades and you get into that and you was enticed enough to get into that, it's hard, but you got to take that little bit of money. That's free money. Take it. You know, basically, don't try to don't try to get that mind frame. I'm gonna take this $5 winner and turn it into a $50 winner. No, you got to be cool with that $5. Your account size can only justify $5. Why? You could have got more. Yeah, you could have got more in that trade, but you would have had to have the balls enough to put all your whole account on that trade. And possibly you didn't believe enough in that trade to do so. Or you smart enough to know that that ain't a smart idea to put all your account on that trade. You know, like this, I don't care how confident you are. It's just not a smart idea. So with that being said, take the money when you see it because your account justifies what you put on the trade initially. You know, shit, if you only got $1,000 in your account, you can't put $10,000 on the trade because you ain't got $10,000. So don't expect to make a $10,000 size trade profit amount. You know, be cool with that, and you know, and get more familiar with percentages more than anything than the dollar amount. You know, I mean,
Man. Don't try and like knock it out the park every time you swing at bat. They guys like the sluggers that they designated hitters, so there to not knock it out the park. They probably not they swing to knock it out the park, like their job, like they get paid, to do that. Then you got the same guy that get paid just to hit a bitch, like just connect it and hit it to an area where you can get on base, like. You don't have to do the fantasy knock it out the park to get the big money. Like no, if you just good, consistent, and you nice hitting
hits.
average, yeah, then you damn sometimes get more.
Facts.
You know what I'm saying? So it's like yeah, man.
You got more enough. You got a better shot at making it on a baseball team if you a base hitter. If they can count on you to get the next player to the next base, you got a more shot and more of a slot position to get on a team versus a nigga that just, oh, I want to hit home run. I'm a home run hitter. I'm a home run hitter. Or I'm a home, like if everybody said they're a home run hitter, nigga, we only need 1 or 2.
That's a fact. That is a fact.
1 or 2. Like, you can't have a whole home run hitter. Like, that don't even make sense. Because you know what? If I'm a pitcher and I know you got all home runs, guess what I'm going to do? I'm going to walk all y'all.
Come
I'm going to walk all y'all niggas. I ain't going to get no grand slam on you.
Come on.
I find that one weak link and strike his ass out. But you know, like you can't come out too greedy because the opposite, the team that's more smarter than you, they got more leverage or more knowledge, they scale against you.
Right.
And they smart. Sometimes you don't have to be the most strongest and the most powerful. You got to be the most smartest.
Yeah, it'll be an exciting week. It's gonna be fun. I'm looking forward to this week on multiple reasons. Well, yeah, this week will fly by. I'm gonna just try and, I'm gonna just wait till those perfect prime opportunities to step in. I'm gonna take them suckers in, and I'm looking for a nice holder. Get one that can shoot me through CPI and all that inflation. And if I nice one and hold it and just see what you add me, then that'll be nice. But we shall say it's gonna be a lot of movement at good times too. Like ain't gonna be super late, type of craziness, but Yeah, that's gonna be good.
But, yeah, I'm looking forward to it, bro. Like I said, I'm not scared of highs, but I'm really not looking at bulls right now. I mean, to be honest. And I really don't. I never like to be one-sided. That's one thing. That's one thing as a trader. You can't just look at the market like, oh, you sell. I'm only doing sales. I'm taking sales. Like, no, you have to have an understanding. Like, okay, if the market is lower on the higher time frames, daily, and weekly, yeah, you probably shouldn't be looking at buys on a 1 hour, because if you do, chances are they might be short-lived. It might. Yeah, you could catch the luck and catch the low and buy it, and it was no other candles on the higher time frame showing you buys, but you just caught that 1 hour candle that was the low of the year or whatever. Like, yeah, that's rare. Like, who is creating YouTube videos or a course on how to catch the bottom of the market? Confirmed. How to catch the top of the market? Ain't nobody doing that, bro. Because if it was that easy, niggas, bro, come on, man, I gotta say it. Nobody's doing that shit. So you're not gonna catch the bottom or the top. Catch the meat. Catch the middle. That's the most important thing. Look at the sandwich method. When you make a sandwich, what's the most important thing in a sandwich? The bread or what's in between the bread? I ain't saying what makes a sandwich. That's the most important thing.
Yeah, that's a fact.
I ain't never heard nobody say, I got bread sandwiches. Hell, never seen a company do that. So until then, it's all about the inside, man. What's the core? What's the core?
Yeah, that determines the sandwich. That's a fact.
Yeah.
But
As far as these charts, I'm gonna check out this daily gap. We already mentioned that build charts. Right now, the next target is us filling this old daily gap from April 2020. This is the first up move from COVID lows. This is where we at, guys. Listen to me when I say that. You heard me. We are approaching 2024. We are in October. Now, granted, price is not here. We were here last week, but we got more reason to believe that we will return to these prices and continue bearish. If market does continue on its trajectory, yeah, we could go up. Anything can happen. We're not future tell. We can't read the future and shit. We can predict the future though very well. Can't just read the shit. But with that being said, this is a gap from COVID lows. This is a very important low. Like, this is not market. This is not economy. This is something that was, that happened. That's all I'm gonna say. This is something that happened, and the market happened because of what happened. And now we back at those levels. 2020 April to 2023 September, October. That's what, over 3 years, right? Over 3 years.
yeah,
I just want to see what Google tells me. Search when. I know everybody know the answer, but when did Joe Biden become president? Joe Biden became president on January 20th, 2021. Let's look at the markets on 2021. What is it? January 20, 2021. So now you can see a little bit better where we at. This is that daily gap over here that we testing from April 2022. Now, keep in mind, we have another one down here that we can test too. That's from March 2020. And this was the last year of who's Trump. Yeah, I was about to say Obama. Yep.
Yep.
Yeah, so that was the last of Trump's presidency. Then we come all the way up here, January 2021, the 20th. Bam, right there. Joe Biden became president. Joe Biden told him to buy up the market. Joe Biden said, I'm about to put a sell order on Australian dollar, $1 million. And then, yeah, well, let's tank that hole. Let's go back down to COVID levels. That should be crazy if that's all they do. But nonetheless, new president, high the market after COVID, and we've been tanking ever since. He's gonna be pretty much wrapping it up. I think we got a new one coming next year, right? January. That's when we new president. That's how it's playing out, or is it 2025?
Yeah, 2024 is the election year, so a new president will be announced come November, I think they do it.
Oh, okay. So the election year is next year, and then we will have a new president.
Inauguration.
5.
Yeah, all that stuff they start doing that, yeah, January of 25.
So I like to, I always like to say the new president typically repairs or continues the fucking baton, if you will, for what the previous president did. And, after we came out of what we came out of, in 2020, that was the last year for Trump. He did what he did, opened the floodgates to for support for America. Everybody got their money. Everybody was happy. Yada yada. Market made an increase due to the dollar being weakened because of all that money we were spending, I guess, and the failing of the dollar because of overall, the macro markets of the economies across the world was just down because everybody was going through this shutdown shit. So we get that dip in price because everything was bad. It wasn't like who's bad against who. Like we all bad. You bad, I'm bad. Everybody down bad. So can't go up. Besides probably like a Bitcoin or something like that, maybe. But basically everybody was kind of holding it down and we had a market increase due to the dollar being weak and weak and weak. And how do we combat that? Well, we did that by increasing interest rates all throughout that the pandemic times through 2020 and for sure 2021 and a continuation through where we are right now in 2023. We're still continuing down. When I look at the first leg on structure, which is here, if we break through this area, I feel like it's a very high chance with this clean traffic, we can feel all this and the market come down. At least if we don't test this extreme low, we can at least come down to this first structure point, uh, from this bullish move that we experienced when we first, when the pandemic hit America, basically. And that was that rally we experienced from the dollar being weak. And you can basically find that on every chart against the dollar. So yeah, that's basically where we are right now. We testing this area, this gap. Like I said, the only reason I have this gap written because it is there and it didn't get filled yet. We tested into this area after we were created, and this would have been a stupid great buy. If you were looking at the markets in this fashion around that time, crazy buy opportunity right there in hindsight, but still in all. Coming after what you're coming after, that was, if now, of course, in hindsight, looking at 2020, what we were experiencing, this was a new experience for all people in the world. So nobody knew. A lot of people probably wasn't focused as much. Maybe the people from the 2008 crash probably was ready for something like this, or ready for the fake out, if you will. Like they saw that sale, like, oh yeah, it's not a real sale. This is a sale because it was happening. But once we start to come out of this, it's going to be the buy opportunity of a lifetime. And it was true. I mean, look at people who bought houses around this time. Like I showed you in that one diagram I sent you, people who bought houses just sat on them. No improvements, no nothing. And come 2022, 2023, you could sell it for like 150, 200% increase with no improvements. Just put it back on the market, make money that way. So everything was like that.
Land value.
Land value increased, access increased.
Yep.
Dollar.
Thanks.
So you got a weak dollar,
Yep.
got property values increasing. Like, oh yeah, that's gonna create a bubble. And the only way to combat that is, put a lot of money into the market. A lot of easing. A lot of rates was low at that time. People was trying to get people to buy houses because it was like, we hurt. We got to entice people to buy it. So let's drop these rates. And now that the price got so weak due to that and with everything going on, with with just the health of the market, it created this bullishness after this sell-off. Yeah, that's right. Because truth be told, we should have seen a bullishness right here after we closed below this wick. I don't know what created that shit. I think not 100% sure what's on help. But yeah, man, that's what we're attacking. I said we haven't broken past this level, and if we do, we got another level down here. Same scenario. We wick down another great buy. This was like the buy from March during this day. Like I said, if you know, you know. If you know about these opportunities, yeah, they are
Would
there.
you like right now, looking at everything, going over everything, if you can take one trade right now to end the year? Well, I don't want to say it. Yeah, fuck it. To end the year, what would you do?
Looking at it like right now, I would.
You know what, bro? You know what? I kind of want to say this week, or this month almost, because the year, yeah, that's too
No,
many opportunities in between.
because I mean we're in the last quarter, so it's only 3 months. 3 months.
Okay, okay, well, yeah, yeah.
The 9 months we already put in. So with that being said, it's three things I look at. One, um, these last two swing lows after we created new lows in the year, they resulted in a high trying to test this this triple high, like it was a wick rejection rate. So this is a strong high right here, and it's true because it's rejecting this area. You know, this was the old yearly low from May. You know, after we had this bullish push right here, that was the old low, and it took us all the way until August to close below that. So all summer we was up here, and then we just not closed below that. So being that we down in this area, it was a struggle to get above here with these two wicks up here. So that's one thing that's telling me the bears are in enough control in the market to where we're not going bullish. Then you still get continuations of lows created. Now, the fact that this market didn't push all the way up yet, I mean, we don't know what this week's about to do. But to answer your question, I would easily, with this scenario, this structure, the wicks lower than one another, they're not going high, we can break this high. But due to that, we created new lows. If this daily engulfs this candle, I would put a sell right there with stops for sure, probably above this old weekly middle area, like stops way above here. And which I got to change this weekly range for the new week. But nonetheless, I would sell it and I would attack this area. And if I get a close below this in a continuation, this is where I will put my stops at. And then I will attack this area. Not to say it's going to get there this year, but yeah, that's what I would do for the rest of the year. This week and the rest of the year. Dead ass.
No, I like that.
I
All
seen
right,
enough
yeah. All right.
that I'm not gonna call this the low of the year. I just saw enough confirmation to where I'm not gonna call this the low of the year. And then like from that, December is gonna be great. November is gonna be great. October is gonna be great. And it's just gonna go bullish. Because if the market go bullish, that means we're gonna have a weak dollar. And in the past, we typically don't have too much of a weak dollar or a weak economy in the last quarter because you got all the holiday shopping and shit and all the travel. So, and also with consumerism, especially coming from a real estate point of view, like I was talking about earlier, the prices are dropping in a lot of key areas, a lot of key cities in the market, as far as from Zillow and Redfin, a lot of other companies that post housing data, the market is starting to trend lower. People that sell the houses starting to drop prices drastically. So everything will get cheaper. So when shit get cheaper, what people do? They buy more. Like, oh, it's cheaper to go to the restaurant. All right, babe, let's go out on a date. Oh, it's cheaper to go on a vacation. All right, kids and family, let's go to Disney World. Oh, it's cheaper to go get this rental house or this, like it's cheaper to do more shit. So you're gonna have that kind of flow into the market. And I feel like with a strong dollar and a strong US economy, that's gonna continue to make this market fall because we're going against the Australian dollar. And yeah, I think with all that wrapped into one, I'm thinking more sales. I'm not gonna sit here and call a bottom. This looked like a bottom. At this swung net, this could have been a bottom. And we had a new bottom. Now we gotta yeah, bro, I'm done with that. What I'm not gonna be blinded by is the structure. Like, yeah, we could call all these bottoms, but it's new lows and it's new higher lows. Lower lows, higher lows. The answer to that question is a bearish market.
That's it. Yeah, I agree.
Shout out to the shout out to them subscribers too, man. We've been going up. I think we have 45.
Yeah, man. We appreciate it. We definitely been increasing as we increase with our reach, and it kind of just works hand to hand, and it's natural. Like Six said, like we don't really go out and hand out flyers or QR codes or posts or follow this. Like, if it ain't word of mouth, then you that's just this is just people naturally just logging onto YouTube and they trying to get into Forex and they just diving deep and they just happen to run into us and they like us enough to click subscribe. That's pretty cool. So really appreciate that, man. It's only gonna get better.
Oh yeah, definitely gonna get better. You know, like
But
I
yeah,
said,
man,
I hear the dogs in the back.
yeah, they in there cutting up, man. They watching 101 Dalmatians, so they having a good time.
Can't wait to see their ass in the future, man.
Oh yeah, soon, super
Near
soon,
future.
for sure. But yeah, man. Likewise, I'm looking forward to come down there this week. Actually, been getting everything situated already because I got a busy week with everything else I got going on. So that way, come Friday, I'll be set to go from out here. But yeah, man, I'm about to go in there and see if I can rally the troops real quick.
Yeah, man, get them together. 101 Dalmatian.
Yes, yes.
All right, brother.
But
We're
yeah,
gonna
man,
tap
tap
in.
in for sure,
We're
for
gonna see
sure.
the continuation, but I'll holler at you tomorrow, man.
All right, brother.
All right, peace out.
Peace, y'all.
So, yeah, we're gonna wrap this one up. Shout out to everybody that was watching. And like I said, if y'all really want to tap in, whoever watch these back, hit us up, and so we can get y'all into the Telegram. So that's where we do most of our daily updates and talking. Eventually, like I said, we'll get back to the daily morning live trades, which we had much success with, but we got interrupted with that with just other personal things and other outside business ventures. But we will get back to that because Forex is the main goal. I mean, trading, whatever it is, whether it's stocks, crypto, or whatever, but we're on Forex right now. And with that being said, we'll see y'all for sure next Sunday. If not, we might do something throughout the week. But until then, peace out, man.